Hi there and welcome to my channel Simply Stocks, and today in this Sunday video I'm going to discuss about in detail about the markets, where it is currently. So this is a weekend, you can say, review of the market, and especially about the small cap index, the Nifty 500, as to where it is, and some of the small cap stocks that I believe are going to perform reasonably fine in my opinion, and you can do your own analysis over the next 3 to 4 months. So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not an official portfolio advisor. I'm not a member of the NSE and BSE, and whatever financial decision that you take, kindly take with due diligence and after, you can say, consulting with your official financial advisor. So every investment into the market, be it in debt, equity, or in any form of, you can say, asset class, is ridden with a risk. So kindly take that into note. So before I talk about the indices, here's small request. Kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions and eke out answers on a daily basis. Plus, you'll have access to my portfolio. You have access to a lot of podcasts with respect to the financial health of global financial systems, global financial, you can say, current situation, how the market would behave, etc. We'll discuss everything down there on Patreon. So you can be a member there, be a member on YouTube or on WhatsApp as well. You can email me if you want to be an yearly member on WhatsApp. So in order to discuss about the market, let me take you to the investing website. So investing.com. Today I'm using this for some reason. Money Control is doing funny things, so I'm using this one. So if you see that the market currently is around 19,300. Now you would say that this is not the exact price that it closed at, but what has happened is, and if you see here, I'm taking 14th of August as the date. The reason for that is I'm taking a weekly yearly chart of the market, and in that we see that the market is, so it did finish around 19,300 even after a week. So it is right here now. If you see the candles, then I believe this is the big candle that we need to be really worried about. We should not go below 19,200. That is the high of this candle, which was made on 26th of June, which was around 2 months back. So around 19,200 is a strong support, and that's why the market is coming back from 19,240 250 levels. Another reason for that is the 50-day exponential moving average, which is around 19,250. So basically 19,200 is your kind of a Lakshman Rekha, where if the market goes below that, then we are next protocol or next level really to look at is the low of this candle, which is 18,650. Or if we go further here some weeks down the line, then we are looking at on 28th of November, we had made a high of around 18,890. So 18,900 is probably the level. So as I discussed earlier, 2 3 days back, that the market is behaving, and market normally moves over the last 4 5 years. What I have seen is that the market moves in a 300 point range. So there is always a 300 point band that is made. So we made a top at around 20,000. If we take a 300 point band from there on in, then 19,700, 19,400, 19,100, that's the band we are talking about. 19,200, and after that, if you see, 300 point lower is 18,900. So we are looking at between the market probably bottoming out around 18,900 to 19,200. My best guess, and there's always a guess when we talk about the market, is that we should bottom out around here. We should spend some more time here, probably a week, 2 weeks. We may go below 19,200 for a while, but eventually we'll bottom out here. The reason for that is that if you see earnings, and if we look at what has been the earnings till FY23, the earnings have been 850 rupees, and if we take 21 times of this earning, we say 17,850 at around 19,200, at around 850 rupees, the earnings which have already come in, we are at 22 and a half times of previous year's earnings, that's FY23. In FY24, we believe that on a safer side, we should have earnings closer to say 950 rupees, that's the Nifty earnings. So we are at 19,200. We will be at around 20 times earnings, 20.2 times earnings, which is not expensive. Remember, by September, we should be halfway down FY24. So it's not that we are beginning FY24. So 6 months down the line, we are going to have earnings, inshallah, around 950 rupees. In that regard, we should be we are trading at 20 times now. Let's go one year forward. So on 950 rupees base, if we see a 15%, or even if we see a 13% jump in that, then we are looking at 950 plus 125. That's just a 13% jump on the earnings. 1075 in FY25. So by December or so, we'll talk about FY25 earnings, but there are more caveats to that we'll discuss with respect to the market. But in terms of pure earnings, by December, we are going to talk about FY25 earnings rather than FY24. In FY25, if all things go well, there is no external event, big external event, then India earnings should be 1075 or so at 19,200, say 100 point lower from here. Based on 1075, we are trading at under 18 times. So it's not very expensive. Although if we say 2 years down the line, we should be trading at 16 to 17 times is the best to, you can say levels are the best levels to probably invest. But I don't see massive downside from here. There could be a 300 point fall more, but currently also there have been very decent fall. What is interesting to see here is that in the week ending 17th of July, we ended up, you can say, what was the close? It was 19,750. After that, there have been 5 weeks of continuous fall. This is week ending 14th of August, in which we closed at 19,310, and even week ending 21st of August, we have finished on, or 20th of August, we have finished around 19,300. So 1, 2, 3, 4, 5 weeks we are talking about consecutive weeks in which we have either closed flat or lower, and not very much higher. So I don't see such kind of pattern continuing. If you see last 1 year, so this last candle of 29th of August, this is 2022, was a green candle. We have had 3 weeks here in which the market fell from 12th of September all the way to say 26th of September. Then we have had a fall from around I think 12th of this is 5th of December until 19th of December, again 3 weeks of fall. Then we saw jitterness and the market actually continued to fall, but there was some flat pattern here. So in this period between say 28th of November, when we finished higher, till around 20th of March, we have had around 8 9 weeks, 9 weeks out of 15, 9 out of 15 weeks, we ended up, you can say, lower. I think this is the worst we can expect, that over the next from here on in 15 weeks, already 5 weeks have passed, over the next 10 weeks we are going to close lower, say another 5 weeks. So half of the time we are going to close lower. Even in that scenario, the other half of the 5 weeks, if we take the same pattern which followed here, even if we take this forward, then we should finish 9 out of 15 weeks lower, out of which we have already finished 5 weeks flat or lower. So I believe that another 4 weeks over the last, you can say, over the next 10 weeks, we are going to finish lower. Even in that case, 6 weeks will pass where will finish higher. And that is why I believe that 19,200 may not be broken. There could be a couple of weeks more. There could be a week in which we finish at 19,100, but that would be just about it. We will not sustainably go below those levels. So that's my understanding now. About a month back, I was talking about the market being very exuberant. And if you take out my video of 15th of July, I'll try to put up the link here. But 15th of July or so, you'll understand that at that point of time, we were talking about the fact that the market was looking toppish and there could be some correction or sideways move, etc. And we have had correction. So that's about the Nifty. Let's talk about the Nifty 500, or the small cap index that we all are invested. Most of the retail investors are trading in here. 16,750 is where the Nifty 500 is. I'm not talking about the BSC small cap, I'm talking about the Nifty 500. I normally try to follow this. Now, the high, if I take out candlestick charts in here, if there is a possibility, uh, then I'll be able to explain in detail. So, this is a chart which is of, so from 23rd of so actually 23rd of May till now. From 23rd of May till now, as to how the movement has been. It has been a continuous upsurge up till here. So till 20th of July, exactly where I said that the Nifty probably topped out, and then we have seen a sideways movement. Now here the correction has been lower. So if you see, this is a 1 day chart, not a 1 week chart. If I take out a 1 week chart, if there is a possibility, I'll be able to explain more in detail. Okay, so this is the 1 week chart similar to the Nifty. Let me take out a 1 year 1 week chart that will give you a more understanding. So this is exactly a replica of what we were talking about in the Nifty. Now if you take this, if you look at it, if you look at this closely, we have had declines from November similar to what happened in Nifty, and it was a big decline in here, and eventually the rally started, and now we are declining again. 16,600, yes, 16,600 is your I think 50 DMA is around 16,600. So another percent is probably what we are looking at here. If you look at this candle was made on the 2nd of July. This is the weekly stock, so weekly chart of both Nifty and Nifty 500. If you look at this candle made on the 25th of June, here the low was 15,995, as I was explaining. So actually the low here was the support that I'm looking at, which is around 16,000, and the high was 16,437. So we are around 16,750. So I think 300 point more. I think around 2% at worst we are looking at a decline. And if we go further lower than that, lower than 16,400, then we are in trouble with respect to the Nifty 500. So in terms of the small caps, we are in trouble if the Nifty 500 go below 16,400. In terms of the Nifty itself, two levels. One to look out for is 19,200. The second is 18,900. Those are the levels. I don't think even in the worst case scenario 18,900 should go back. Another thing you need to look at is when the market was going up, or when the index Nifty 500 was going up. See these 1, 2, 3, 4, 5 weeks, the volume is big. This big volume in here, the volume expansion took place, and as it is coming down, the volume is less. That is a very good sign with respect to the bullishness of the market. So in all scenario, we should bottom out in the next couple of weeks. That's my understanding, unless something changes. We go below 19,400, sorry, 16,400 on the Nifty 500, and we go below 18,900 on the Nifty. only then I would say that there is a bearish sign. So that's about the two indices I wanted to discuss in detail. One more thing I want to add here is the 50 DMA thing, etc., which is there on the Money Control website, and that is something to look at. So we made a bottom at 19,250. Now the 50 DMA is 19,300 here. We are very close to it, but the 50-day exponential moving average is 19,250. So in that respect, I believe that between 19,250 to 19,200, there should be, if you want me to be precisely talking about the levels, I think 19,200 will be a level that should be closely looked at. There is an issue with my laptop, so that's why these things are happening. But 19,200, are the levels that should be closely looked at with respect to the Nifty in a very short term. But I'm very confident that over the next couple of weeks, around at worst 19,100, and we should bounce back from there. Now, if we look at the Nifty 500, if I'm able to open that up, here as well, as I explained, 16,400 is a critical level. 16,600 is also a critical level, and that is why this index is not falling that much, because there are industries like the shipping, infrastructure, capital goods, uh, which are doing extremely well with respect to numbers. So as I said, your 50 DMA is 16,600. This is the critical level, and then 16,400. Those are the levels to look at with respect to the Nifty 500 or the broader market. And if that gets sustained, we are headed much more higher. Now, how much higher are we headed depends on how much of a bullishness global market has, plus our earnings. So I believe that on 950 rupees earning, we can easily trade at somewhere between 22 and a half times to 23 times. So we are looking at 21,500 as the final, you can say, topping out level with respect to the Nifty over the next 3 months, 4 months, 3 to 6 months. There is a possibility after the bottoming out process is done with respect to the Nifty and Nifty 500, we are headed well beyond 21,000, not 20,000, but well beyond 21,000. So in my opinion, and I can take my neck out here. Plus disclaimers do apply, but 21,500 is a level that could come in by the end of the year, or by, you can say, by the end of the financial year, because of the kind of earnings that these stocks are producing. Hence, I believe that Nifty 500 or the BSC small cap or the small cap stocks could continue to perform after a little bit of tiredness for the next 2 weeks or so. So that's why I'm bringing around three stocks in that regard. And you would have probably seen it: Tasty Bite Eatables, KRBL, Avanti Feeds. Purely, most of it is technical, but there is fundamental attached to it. So if I look at Tasty Bites Eatables, here we have had a situation, although the stock per se is extremely expensive with respect to every stock that you buy, but if you want to invest 50,000 rupees, then you are looking at, say, 50 to 60,000 rupees, you are looking at buying 3 shares of it. There's no issue with that. So around 18,000 is where the stock is. Now it surged and surged on heavy volumes just recently, and this was around 10th of August. The reason for that has been the numbers. So if you look at the numbers of Tasty Bite Eatables, just to give you a brief as to what the company does, it is a manufacturer of ethnic and natural vegetable packaged ready to eat food for the global markets. Ready to eat Indian foods, like you have the paneer butter masala, you have palak paneer, etc., and other kinds of vegetable foods. Plus, you have non-veg foods, etc., naans and all kinds of food that they end up packaging and exporting to places like Australia, the Middle East, Europe, and especially America. So what they have come up with are extraordinary numbers, very, very strong numbers. In the June quarter, what they did was 154 crores, which is perhaps the highest quarterly numbers in their history in terms of sales, and they had margins of 21%, which is near to its all-time high margins. And the margins expanded from around 12% last year in June to 21%. Even quarter on quarter the expansion was around 4%. That's why the stock surge. I think there are large, I'm not sure, but there are large investors getting into the stock. Otherwise we would not have seen such volumes as we are seeing, as we saw on the 10th of August. The volume was around 48,000 shares or so that were traded. Very less shares normally trade on the bourses. Here also we saw 150,000 shares trade. This was 9th of July 21. So in last 2 years this is the highest uh, a number of shares traded. So there are big players getting in now. Because of those kind of earnings, the PE has gone down, although earnings have gone up. So if you look at the PE thing, it is trading at 100 times earnings, although on a 3-year average it is around 105 What I believe is that if this earnings continue for the next 2-3 quarters, the stock could do wonders going forward. So an EPS of around 83 rupees, so an EPS of 83 rupees versus an yearly EPS in March 23 of 117 rupees. That is the kind of earnings that the company has posted. 21 crores in one quarter versus 30 crores profit for the year last time around. So I think uh, fundamentally speaking, this is a turnaround kind of a story. We have had in shareholding pattern large promoter holding at 74%. FIIs are stable at 3.6%. DIIs sold a bit, but I think they should get in with these kind of numbers. So if somebody is looking for big upside, I think decent to big upside possible. I won't like to put up a number, but here a huge upside possible over the next, very decent upside possible over the next 1 year. Again, the caveat is that the numbers should continue to be better. It is a small cap stock, so kindly take that on note. Second stock in my list is KRBL. Now one more thing about Tasty Bite. In Tasty Bite, one should keep a stop loss which should be closer to the breakout level. So the stop loss here would be deep. So we are looking at very decent upside, but your stop loss would be somewhere around 15,000. So if you buy around 18,000, your stop loss is around 15%. So kindly take that on note. That's why on declines it's a good buy around 17,000 or so. Your stop loss is 15,000. I think 17,000 would be very good levels to get into. In terms of KRBL, again the stock 9,000 crore market cap company, doing reasonably well. The chart is up and down, but if you look at the numbers, there have been a big, you can say, improvement quarter on quarter. In March they had issues with exchange rate, they have had issues with inflation, etc., and so 11% margins came in. Again they are back to 18% margin. They are back to with big numbers of 250 crores and a bottom line EPS of 8.2 rupees. If this traction continue, we are looking at 30 rupees of EPS this year on KRBL. 32 rupees of EPS this year, in which the sales should expand. So overall I see big movement, especially because of the festive season. So I think numbers should end up improving more. In terms of shareholding pattern, we have had FII sell in the quarter of June. So that is not the best of the sign, but the with respect to the numbers, it's pretty good. Now, chartically speaking, the stock is looking pretty decent. So if I take out KRBL on money control, if I am able to do that, you'll have a better understanding. So basically, it's around 400. Its 52-week high is 445. It's not going below 380. So basically 380 is your congestion zone or your support zone. So if somebody is looking to buy, you should keep a stop loss of 380 here. And I think trading at only 12 times earnings, the PE should expand with respect to the stock. So your stop loss remains here, which is around 380, 382. And once 445, 450 is taken out, if I take out a 5-year chart, you'll have a better understanding of what is happening, or more than that, actually the max chart. Once 445, 450 is taken out, we are looking at levels of even 600, 580, 600 on the stock, 540 to 600 or so. So that is why around these levels there is massive support around, you can say 380 or so. There is huge support. If I look at moving averages also, you'll have an understanding. So your stop loss is 388, just below this 20 DMA, or if you want to put a deeper stop loss, your stop loss is 377, which is a much better stop loss to keep. And over the next 6 months, I see massive upside again on KRBL. Again, I don't want to put a number, but above 450 it could do wonders. So that's another stock. In terms of, you can say, tasty bites, let me take that out also, so I can technically tell you as to where the stop loss would be. Probably if you get a chance on this decline, if the market keeps declining for about few days more, if you get a chance to buy around 17,000, that will be a very good level to probably get into the stock. You see here, its all-time high has been around 19,800 or so. I think one should keep accumulating. It looks expensive at the moment. It has run up very quickly. So in terms of moving averages, I suppose your 20 DMA is 16,000, your 10 DMA is 17,000. If you get a chance to buy around 17,000, go ahead and buy. Your stop loss will be 16,000, and you should see much higher levels than 20,000 on the stock. So any 4-5% decline, it's a buy around 17,000 levels, and 16,000 will be your stop loss here. Now third stock I want to talk here, let me just close this. And so the third stock I want to talk here about is Avanti Feeds, an erstwhile favorite, a multi-bagger from probably 100 crore market cap going to 10,000 crore market cap and all that, 100x and all, now is coming back into focus. Why? Let me just give you an idea of the numbers here. So in the June quarter, they did exceptionally well. So normally they were doing around 1,000 to 1,200, 1,300, maximum 1,400 crore sales quarter on quarter. But here they did 1,550 crores of sales in the June quarter, versus the last time around they did 1,570 crores. So the numbers are back. Now what is interesting is that the margins expanded from around 7%, it has gone to 9%. Even Q on Q, from around 1,100 crores, they have done around 1,550 crores, which is a huge jump. So eventually margin expansion led to a profitability, even with, you can say, even with depreciation increasing, etc., profitability of 115 crores versus about only 73 crores in June of 2022. So huge jump in profitability year on year, big jump in profitability quarter on quarter of around 15%. I think if the trajectory here continues, if I take out the other income part, even then, say around 95 crores, say if I take out, say, other income, if I reduce this by 20 crores, even then you can say a bottom line of, say, around 100 crores or so versus 73 crores is pretty big. So the numbers are coming back. I will not be surprised if they end up having around 27, 26, 27 rupees of EPS. Based on 26, 27 rupees of EPS at around 400 rupees, the stock looks very interesting at around 14, 15 times earnings. And I think if I look at on a PE basis, we are looking at an index at 19,000 with stocks that are trading at levels of 17,000, 18,000. So it's trading at around 14, 15 times, whereas a 5-year PE average is around 19, 20. A 3-year PE average is 21. So in my opinion, this should trade at 21 times. Again, on 27 rupees EPS, if I take that out, we are looking at 30 to 40% upside. I'm not saying that we are going to go to 550, 560, but the margin of safety is big here. Numbers are good. If I look at the balance sheet, that is strong, a debt-free company. If I look at shareholding pattern, FIIs, this is interesting. They have increased stake in Avanti Feeds in June quarter. DIIs has slightly reduced, but decent investments from FIIs as well in a small cap like Avanti with 5,000 crore market cap. So again, decent upside possible. Around 400 is the stock you can buy. Technically speaking, if you buy around 400, you should have a stop loss, which should be very close by. It won't be too big a stop loss because the stock has not gone up so much, and that is the best part. So if I look at it, then the stock is around 400 at the moment. Your stop loss should be around these levels. So actually it is right at the 200 DMA, 398, 391, 397. Probably you buy at a slightly higher level, let it go up a bit. You buy around 410, between 410 to 415, keep a stop loss at 390. So that will be your stop loss. So buy on a slightly higher levels at around 410, 415. Have a stop loss at 390 and then trade the stock. I think should do well. So these are my picks probably for the next 3 4 weeks. Again, disclaimers do apply. Kindly do support me on Patreon and hit the bell icon so you can get my videos straight away when I post it, and help me grow the channel as well. Thank you.